Hello everyone and welcome back to the channel. So since my last update, I have completed one of my 3 goals that I set out at the beginning of 2023, and that was to receive $1,000 a year annually from dividends each and every year. So I finally crossed that, and it's nice to see that I've crossed one of the goals. So now I have a new goal, and that's to earn $1,500 a year in dividends. So I am using WealthSimple Trade. I have $22,366 currently across 2 accounts in my portfolio. So I have an RRSP with a value of $1,080, and it's up 20% or up 184. And this one contains Starbucks, SCHD, and Vici Properties. And then in my TFSA, we finally rolled back into the green due to the increase in value from all the technology companies, and we're up 185 or up 0.88% all time. So if you want to follow along with my investing journey to create a stream of passive income, please leave a like, subscribe to the channel, and let's start the intro. So in the TFSA, just in the past month, we're up 3%. Just this month, past 3 months, we're up 10%. So year to date, we're just up 10% so far, so up $2,000. And that's why it's really important to stay invested at all times, because everybody's talking about how we're going to enter a giant recession, all the stocks are going to crash, and then, you have the opposite happen. I mean, the real honest truth behind it is nobody has any idea what's going to happen to the economy. Nobody knows what's going to happen with interest rates. That's even if you work at the Federal Reserve, you're not going to know what's going to happen. So they recently increased the interest rate in the States by 0.25%. And, but since then, the market has been pretty strong. And then if we just go to the all-time, we're up 1% all-time, or up 185.91. So in the portfolio, we can see that Apple has really climbed out of the 150 range back up to over 160. So this one's doing very well. With Algonquin Power, the market is really liking this company, and the sentiment is improving as the price is climbing. So I purchased 2 more shares of Algonquin Power and Utilities. They had a pretty decent earnings recently, so I'm giving this stock a little bit of credit, and I do believe that the company can improve its financial situation that it's been in, because management does seem to be doing what it's promising. So I'm going to be buying this regularly, just a couple shares here and there while it's trading at these lower levels. With ATD, this one has been reaching all-time highs, so it's at 67.95 and up 17%, doing quite well actually. With Aritzia, I actually purchased 2 more shares of this while it was under $40. I paid around $39, and I picked up 2 more shares. So Lululemon actually had great earnings, and as a result, Aritzia has started to climb back from the sub 40 range. So I still think this has a lot of room to climb. So we're up 13%. It was as high as the mid 50s. And I definitely think it can get back there again. So we'll probably just have to wait for their earnings to come by for them to climb out of that. With Brookfield Asset Management, these and BN and BAM, both of these have been climbing up pretty steadily. I purchased 1 more share of BN because it's just in a bigger dip than Brookfield Asset Management, since it's all the Brookfield businesses, and BAM is just the asset management portion. And then we see the Canadian banks are starting to climb out a little bit. They're still in a big dip, but generally they're climbing up pretty well. I purchased 1 more share of ETHY. So for anyone that's not aware, I do use Shakepay. So you shake your phone every single day for free Bitcoin. And once you reach $5, I mean, you choose to either keep the Bitcoin or you can sell it. And that's what I do. And then I put it into this ETF for Ethereum. And then this pays me a monthly dividend every single month. So I did that, going up to 65 shares of ETHY. And Intel also had some major news that they had a new Xeon processor that is going to be 144 cores and set to release in 2025. And a major thing about that is that it's reportedly 4 times better 4 times faster at AI workloads compared to AMD's EPYC processors in the data center market. So it's interesting. Everybody's counting Intel out, but ever since that presentation, the stock has been on a nice little rise. It's still down a lot year to date and just over the past year, just due to all the negativity surrounding the stock, but also because of all the uncertainty due to their heavy investment into the foundry business. But I still believe in the company, and that's why I continue to hold it, despite that large dividend cut that they did kind of spring on us. But I'm definitely going to be hanging on to this one, and we're going to see where it goes a few years from now. Microsoft has hit, all-time highs this year. It's performed very well this year. So any kind of technology stock has performed rather well this year, with the exception of, Google's done pretty well as well, but Apple and Microsoft have done a lot better than Google, at least for my portfolio. With Smart Centers, I purchased 3 more shares because it was in about a 10% decline. So that's also kind of climbing out. So only down 6.5%. And we're now currently earning over $7 a month from Smart Centers. So I'm just building this out gradually. And I'm going to try to get it up to $8 a month. So, I'll buy a couple shares here and there. For TD Bank, I bought 20% of a share of TD. And that one's climbing back out. Also, that was in the high 70s. But it's starting to climb now. So I bought 0.2 shares of that. And then Tesla has hit another high. So it's back over 200 again. So we're up 10%. Not much change with Tesla. The company's still doing very well. It's just a lot of positive momentum in the market. And that's why it's important to stay invested at all times, because you cannot predict the market. It's more important to be in the market. So time in the market beats timing the market every single time. And that's something I'm going to follow, and that's something I definitely think that anybody should do if they're a long-term investor. So if you've watched the entire video, thank you. Please leave a like and subscribe to the channel to follow. So I've earned $1,246.75 in dividends all time since starting the portfolio. And then annually since the last update, we've gone up from $9.95 to $1,005. So about an extra $10 every single year just from extra deposits, reinvesting our dividends. And monthly average has increased from $82.97 to $83.83. So we're going to continue increasing this with each and every month. From weekly, we've gone up from $19.15 a week to $19.34. Daily, we're making an extra 3 cents every day, so $2.73 to $2.76. And the months to earn $100 is shrinking, so it's down to 1.19 months from the previous 1.21. And the hourly wage, if my portfolio was to work a 40-hour work week for me, it earns about 48 cents an hour, which is pretty nice. So we'll keep depositing money and see if we can increase that next time. As for the goals, so I have crossed the $1,000 a year in dividends mark, and I've now increased a new goal. So whenever we accomplish a goal on this channel, we always push forward with a new one. So this is my new one. We're going to try to earn $1,500 a year in dividends, and we're getting close to doing $3 a day in dividends, $100 a month in dividends. And for the year to date in 2023, we've earned $241 in dividends, and we're approaching beating all of 2021 in just a little over 3 months. So I need a couple more dividend payments to come in, and we will eclipse all of 2021 in just a few months in 2023. So that's why I really like dividend investing. It's very observable. You can kind of see the progress from year to year despite all the volatility in the stock market. And that's why it's a strategy that really suits me, and that's why I like it. So thank you so much for watching, and let me know in the comments below like how your portfolios are doing in the past month. All right, have a great day, everybody.